We're going to get started because if people filter in, they filter in. I want to be respectful of everyone's time, and I want to thank everyone for showing. We had a lot more people sign up, and I don't know where they are. I hope the computer's working. I haven't gotten any crazy texts this morning, so that's a good thing. So anyhow, in our last session that Main Street Planning Group had, we talked a great deal about long-term care. Long-term care is one of those things that you need to talk with every client. I don't care if your clients are 30 years old, or they're 60 years old, or they're 80 years old. And the reason you have to talk about it is because statistics say and show that over 70% of us, our family members, you, me, and everyone we know, we're going to need some sort of long-term care. Okay? The other 30% of us, you and me, are going to take care of that 70%. So 100% of us are going to need to talk about long-term care. Now, I say that from my own family experience, from other people's family experience, and I know Chris is going to go into that. But the financial impact of having a long-term care event or dealing with it affects everybody. And it affects your business to the extent of what happens if your client runs out of money. What happens to those beneficiaries when those beneficiaries, what happens in the planning aspect, and what's the emotional impact on everyone when there's a long-term care. And I say this because even if I don't think anybody that's here is dealing with, let's say, 30-year-old clients, but even if you're dealing with the children of clients and you're talking to the children, your next clients are their parents. You know, you want to be talking to find out what their situation is, what their family situation is, what their parents are doing. You have two sets of parents. So one set of parents may be local, another set of parents. Well, what happens if dad falls? What happens if mom needs to go to the hospital? What are you going to do? Well, I'm going to run to Florida and take care of them. Well, who's going to take care of the kids? So there's family dynamics here that not only protect your business, protect the assets you're trying to protect, but also lead to more sales and a greater family caregiving situation, which leads to more business and future generational business and intergenerational business. So with that, I think it's very important that not only is a discussion made, that there's a knowledge base of what can we do for clients, and not every client has the same solution. There's not a same plan for everybody. And this is why I think it's very important that I put in front of everybody every possible solution that's out there in the state of New York or throughout the country. And with that, I'm going to introduce you to Chris Gathers, who is a regional wholesaler for Nationwide. And they're going to talk about some of the solutions they have for addressing the long-term care need. So with that, Chris, take it away.
Thank you so much, Neil. Truly appreciate the time. Tom, it looks like you were just rushing back from your shot. How was that? Did you hit a good one?
No, I'm drinking iced tea. I'll save the shot for about 3 o'clock. But in honor of Neil, because Neil always puts on great meetings, and in fact that Neil is now the New York State membership chair, I decided, out of respect for Neil, to put on a
perfect
shirt.
I appreciate that. Thank you.
Looking good. Looking good. Well, let me go ahead and share my screen. Start off with a quick presentation on our New York CareMatters product. By a show of hands, how many people have sold a MoneyGuard policy, Lincoln MoneyGuard? 1, 2.
I bought one, if that matters.
Okay.
Yeah.
No, I'm sorry, I'm sorry, not Lincoln, not MoneyGuard. I bought Nationwide. I apologize. CareMatters.
Perfect.
Your answer. That's what you want to be here.
That's exactly, I want to hear more about that as we go on.
Sure.
But, in the state of New York, we obviously have limited life options, right? We obviously have limited long-term care options. And what we have found is this product that I'm about to talk about, to me, is the number one product in the state of New York for LTC coverage. It's pretty plain and simple. And it's not just a pricing thing at all. I would say that it's more of the value of what you get with our contract over the Lincoln product and over the Mutual of Omaha product that currently stands in New York. That's an LTC standalone product. So I'm going to start off with a story. Sorry about that. These are my grandparents. And I think there's no better way to illustrate the power of our product than to tell a real life story of what many of your clients will be facing. On the left is Lillian Walker, and on the right is Walter Walker. Walter was he worked in the steel mills in Pittsburgh. He did that for 32 years, freezing cold in the winter, boiling hot in the summer, worked on cement or concrete, bad knees by the time he retired. My grandmother on the left, Lillian, took care of the house and everything associated with it, right? The kids, the cleaning, the cooking, the slaving, all of it was on her shoulders. So when my grandfather hit 65 and he was able to get his pension from Mesta, a steel company, it was a great day. And they said that they were going to spend their golden years at peace and quiet. The kids were all moved out. The house was taken care of, paid for. They had a good amount of savings. They had Social Security age, right? So they were looking forward to peaceful, fun times. Well, fast forward about 10 years, maybe 12, my grandmother started to become very forgetful. And she would leave a pot on the stove, boiling water, and that water would disappear in the pot because she had forgotten that it was even there. My grandfather would come in and be like, "Why is there a burning hot pot on the stove, Lil?" And I'm sure if anybody's been through this type of situation, it only gets tougher, right? Much tougher. So this situation then becomes my grandmother forgetting names, my grandmother forgetting faces, my grandfather becoming, increasingly more worried. But what is his job now? His job is to safeguard the house, safeguard her, take care of her, make sure that now food is on the table. So he has to go to the grocery store for the first time in his life. And he's got bad knees, a bad hip. And this story ends up being a 4-year example of what informal caregiving is. It takes something that seems harmless, like, oh, I forgot a pot on the stove, to I can hardly remember anyone in my life, and it's making me very, very frustrated. And that was my grandmother. And it got to the point where my grandfather's health started to decline. And he had a stroke. And their hand was forced. They had to go into a home. They went to straight to a Medicare facility because they qualified for that. And frankly, they had no savings enough to really go into anything more than that. So the reason I tell you this is that this is what care looks like in our country. At least 50% of cases are informal caregiving in nature. Why is that? Well, one, If you look at how many cognitive impairments people are getting as they get older, dementia, early onset Alzheimer's, all these things are becoming more and more prevalent. Why? Well, one of the major factors is that our bodies are living longer, but our minds aren't, right? So medical science is a beautiful thing. It'll keep our bodies going many more years than they're probably supposed to. Well, our minds don't keep up. So we've got a situation now where people are declining and they need to have their loved ones take care of them, because it doesn't start off like if I came home today from a doctor's appointment because I was forgetful and I said to my wife, Nancy, I'm forgetting a bunch. I went to the doctor. He says I have early onset Alzheimer's. Her first reaction, depending on whether we fought that morning, wouldn't be to send me into a home. All right. It wouldn't be go take care of yourself in a home. Go get the best care you can. It would more be, well, we're going to figure this out as long as we can. And I'm going to do my best. And I think that's where we're at. Now, the biggest difference, I could end my presentation right here, letting you know that Nationwide's contract and all of our LTC rider products and linked benefit product allows informal caregiving. And that informal caregiving is unique for a product in the state of New York. There isn't another option for that in the state of New York. So to me, if you want to take care of this type of client, which is right now in your book of business, and make sure that this situation is covered and they start to get the help from a monthly benefit out of their contract under an LTC policy, ours is the only choice in the market. Now, when it comes to pricing, you would think that that price costs more for our contract because we could pay max benefits out right off the bat over, say, a MoneyGuard contract who only pays on expense receipts. So if you have receipts and you're in an informal caregiving situation, what are you really paying for as a MoneyGuard contract? If you possibly have somebody coming in from a service doing part-time work with you to help you administer medications or things along those lines, but it has to be medically focused. It has to be licensed care. So in a purely informal caregiving standpoint, we're the only contract out there, and the pricing is actually better for our contract in the state of New York. So I'll repeat that. Our contract pricing is better in the state of New York for more value, more flexibility. So let's get into how the contract works. I appreciate you listening through that. Formal caregiving, which is defined as either home health care with a service coming in with a licensed practitioner, or a facility care situation, nursing homes, assisted living, community care situations, that totals $241 billion a year. Does anyone want to guess if informal caregiving is higher or lower than $241 billion a year? Higher. Yes. $522 billion based on a study done by Rand. Now, a lot of people will say 522 billion, that seems like a highly inflated number. Let's cut it in half. I will give you 50% of that number, and it still is more than formal caregiving in the United States. What does this number include? This number includes caregiver situations, right? Salary that they forfeit. 50% of all full-time caregivers, and that's defined 20 hours per week, end up quitting their jobs. So their salary's gone, benefits gone, pensions gone, 401k savings, all of that is wrapped into this. Then you've also got sick time, leaves of absence, right? So somebody takes 6 months off to go take care of their mom. This is all built into that. So this to me is something that we just simply cannot ignore. It's a huge number. And I would argue that this only is going to increase. And why do I say that? And I'll forward this over to Neil. I just read an article last week that said that 65% of all nursing homes, I don't know if anybody saw this, 65% of all nursing homes are set to close in the next 12 months due to COVID. So if you look at a simple supply and demand conversation, and you look at the demographic situation in this country, with baby boomers speeding towards this situation where they might need care, we've got a major issue on our hands. And prices are only going to go up. Because I don't know if, somebody had the Washington, D.C. picture up. I don't think they're the ones that are going to figure this out. So it's incumbent on us to do the proper planning.
As a matter of fact, I just want to add to that. The state of New York was one of the first states in the country out of 4 states to come up with something called the New York State Partnership for Long-Term Care. There now no longer is any product that supports that, nor do I think there's anyone in the state of New York that remembers it. And it was very prominent at one time.
Yeah.
And that was to save the #1 supplier of long-term care expenses in the United States, the #1 policyholder, which happens to be Medicaid, federal government and state governments. That's the #1 provider of long-term care.
Yeah,
Poverty.
definitely.
Same.
Thank you for that. So this is the lost income and benefits of a caregiver. We're looking at, $300,000 over the course of a caregiving situation. So again, things that are tied into that are leave of absence, benefits, etc. So again, New York CareMatters is the only cash indemnity policy in the state of New York. No restrictions on services. So somebody goes and qualifies for our contract and the benefits under it, whether it be 2 of the 6 ADLs or a severe cognitive impairment, we pay out the maximum monthly benefit associated with that contract. So that is a big deal, without a doubt. No receipts. People often ask about recertification. We reserve the right on an annual basis to recertify the claim. And how do we do that? Well, if somebody's already in, say, a nursing home or a facility, and we have the name of that, we will just call the facility and say, is Mrs. Smith still there? We will not contact the client. If there's a situation where there's a service coming in to the home, and we have the name of that, we will simply call that service. Are you still heading out to Mrs. Smith's house on a weekly basis? Yes, we are. And that's the end of that. If it's an informal caregiving situation, we will ask that the doctor who certified it, or it can be a separate doctor, recertify it and say they still cannot, Mrs. Smith still can't perform 2 of the 6 ADLs or has a severe cognitive impairment. And that's good enough for us. So again, these are fully guaranteed contracts. Oh, one more thing before I jump off because of this topic. Home modifications, right? Incredibly important in the early stages of informal caregiving. So if you have a situation where carpets need to be pulled up because now they have a walker, or There's a situation where they need shower bars or wider doors because of a wheelchair or a ramp. I know that Lincoln MoneyGuard has a $10,000 one-time charge per year that they can do under their contract for home modifications. We will allow, there's no cap on that. You can use the money as an owner in any way that you need to. That includes if somebody's sister, the person receiving benefits, their sister wants to fly out from California, you can buy a ticket with your money. You can pay them a wage for helping to take care of you. You can buy a TV and put it on the wall if you can't move out of a certain room now. The point is, there's nothing off limit as far as how they spend their cash. So how does this work? Well, if you're familiar with MoneyGuard, it works identically as far as the basic setup. So you dump $100,000 into a contract, you buy 171, that is a death benefit. If they never use it, never go on claim, they get their $171,827 back, guaranteed. If they go on claim and they stay on claim for a year, and there's roughly what, $85,000 left as a death benefit, they get their $85,000. Their heirs do as a death benefit if they were to pass away. So let's say they go through this 2-year bucket, they pass away right here. We pay a residual death benefit of $17,183, which is 10% of this initial amount. Well, let's say they have a 6-year claim. This is a pure LTC bucket. That is pure LTC only. So there's no death benefit associated with this. If they're midstream in this rather, and they paid $171,000 extra, then they had 171 plus 171. You're coming out to 343,000, say, that they were able to get out of the contract. And from that point, a residual death benefit will still pay $17,183. This is the potential full benefit at the end of 6 years, $515,481, $7,100 a month. And then if they were to pass after this, they still get the $17,183 from a residual death benefit to their heirs. Does anybody have any questions on this? Fully guaranteed, no price increases. This $100,000 premium, of course, is a single premium. If you were to do a 10 pay of $10,000 a year, we can't raise that cost up, lower your benefits, anything. Everything stays guaranteed and static as far as these items go. We have 2 return of premium options. We have a years 1 through 10, you get 80%, or I'm sorry, we only have 1. I apologize. 1 through 10, you get 80% of return of premium. Years 11 plus is 95%. This, I talked about the residual death benefit. We have 2 inflation riders, 3% simple, 5% compound. For full transparency, this is one place that there's a potential for MoneyGuard to have a slightly better benefit, because they do have in the state of New York a 3% compound option. So keep that in mind. If that's something that is important to the client and to you, 3% compound, you can always run it up against the 3% simple or the 5% compound. But they have an edge when it comes to that as far as age 80 benefits. As in, I'm sure you've seen with the MoneyGuard contract, there's no inflation on the first 2 years. That's a New York specific situation. So how is our product? There's some unique features to get to know on this product other than the cash indemnity. We have a 90-day elimination period. And for a while, this was unique for CareMatters across the country in the state of New York. It was only in New York, rather. So what it is that you have 90-day elimination period, go on claim. Beginning of 4th month, we will pay the 90 days in arrears plus the 4th month in advance. So if somebody has a $5,000 benefit per month that they're due, we'll pay $15,000 for the first 3 months and another $5,000 for the 4th month in advance. So they will get a check for $20,000. How it used to work is that you just forfeited the 90-day elimination period, and that was it. Benefits started off in the 4th month. So that is a very nice feature that we built into this contract. Premium savings for multi-pay. There is no modal premium for a single premium versus a 10-pay. So you can either send us $100,000 and buy $350,000 of benefit, or you can pay $10,000 for 10 years and get $350,000 of benefit. So obviously the next question, or that's probably going on in your mind, is compensation. How does that change? Well, single premium would be upfront compensation through Neil. A 10-pay would almost be like a trail, or it is a trail or a renewal. So you've got each payment you make of $10,000, you get a certain rate each and every year on that $10,000. So it's like a renewal. We are looking to add a kind of a lump sum single premium equivalent deal in the state of New York. I think that's going to happen when we get CareMatters 2 in New York. And that, based on New York, that could be 2043. So I don't know when that's going to happen as far as an approval. Simplified underwriting, quick app. So like a pre-application, it's a part 1 rather. You take some very quick information, you send it in through Neil. We schedule, the client can go on and schedule an interview, tele-interview. Behind the scenes, we do an MVR, MIB script check. There is the tele-interview, takes usually about 30 to 45 minutes. And they basically just follow up on a lot of the things that might pop up in certain things. And from there, the policy is usually issued no more than 5 days. So we're looking at, most of our time service right now is somewhere in the 15 to 20 business days total time. And again, that has more to do with how quickly an appointment is available for an interview, more than anything. It's getting the client on the phone. We do have things to keep in mind for the interview, right? A guide, which I can send over to Neil, that walks through what to expect, what types of questions will be asked, etc. So that's always handy.
The biggest thing I can recommend anybody that's going through a long-term care interview or advising their client is tell them to have a piece of paper and a pen and take notes, and any medications they have them sitting right out in front of them so they know what they have. And they're going to ask memory questions. So you want to make sure that they're prepared.
Yeah.
Okay, no problem.
So in summary, again, the informal caregiving is the biggest value piece of this contract. Obviously, the fact that it is a fully guaranteed solution in the state of New York is huge, because we don't have that many options in the state of New York at this point. I do believe the lack of need of receipts and gathering those things is also a huge piece of the puzzle when selling this contract. And again, pricing. We are the #1 product right now in the state of New York on the linked benefit side when it comes to pricing. So anybody have any questions before I move on? As far as CareMatters goes.
A couple of quick things, Chris. Number one, is there a brochure? Would we get it through you or we get it through Neil?
Yeah,
Yeah,
absolutely.
absolutely. I will send it over to Neil. I'll make
Okay.
sure that he has it.
Number two, when I was looking at you and looking at the picture of your grandfather, I now know how you're going to look when you get older. Because you definitely look like your grandfather.
I know. Yeah, thank you. That's a
I'm
compliment.
not the only person who told you that.
No,
And
definitely. That
Number
makes me happy.
three, are the benefits even more rich if somebody's down in Florida?
Yes.
All right,
Yes.
so I have a Florida case I need to work with you guys. I'll work with Neil.
Love it. Thank you. Yeah, there's some things I want to touch on. If you do have I'll spend, very quick amount of time on that. But there's definitely some great things about that product outside of New York that I can touch on real quickly.
If I could, just a couple other differences between their offering and some of the other companies. They'll allow trust-owned in New York and outside. We're starting to see not just buy-sell disability, but for older owners of business, we're doing buy-sell with long-term care benefits. So important when you have 250-year-old owners, something that to be considering. There's just so many options for using this product from corporately owned to trust owned to individually owned, and the flexibility of having that indemnity rider is humongous. So
Thank
with
you.
that,
Yeah, and I'll send something out on the trust-owned portion of it, an explanation. We wrote a white
important.
paper on it to give you an idea of how we view that. This is our LTC rider. The cash indemnity story is the exact same on this contract. It is I think it's the only LTC rider on a fully guaranteed product, life insurance product in the state of New York currently.
Yep. We're down to
it-
3 carriers in the state of New York with a guaranteed universal life contract. Down to 3 carriers, Nationwide being one of them.
It's crazy.
And they're the only one in the state of New York that has a pure LTC rider, not a chronic rider.
And the biggest part of that is that it allows for temporary claims. So if you look at temporary claims and the amount as far as a percentage, we're looking at somewhere in the 30 to 35% based on what you read of all initial claims are temporary in nature. And why is that? Because people are having things like are having a stroke where 20, 30 years ago, if you had a stroke, the mortality rate on that was through the roof. Now, people are able to go into rehab facility, get better, and come back out. Not a huge percentage, but it's definitely a huge improvement of what it used to be. So that's an important part of this product. It is available on our NLG, our GUL, fully guaranteed fixed product. It's also available on our IUL that has full guarantees on it. So if they're looking for cash build, we have a product in New York that does offer this. And we will be coming out with a VUL shortly that will also have full guarantees and this on it as well. It is basically just a 2% per month. So it's very simple. So if you have $500,000 of LTC and you go on claim, you're going to take 2% of that, and the client would receive $10,000 per month for 50 months. One thing to keep in mind, you do not need to take out all the benefit. So if you have a situation where you want to hold on to as much death benefit as possible, you can dial it back by having the client call and say, this month, instead of 10,000, all I want to do is take 5,000. I will say when it comes to CareMatters, take all the money. Take every single dollar that our company is willing to send you. Why? Because if the quicker you get into the benefit pool, the quicker you get the true benefit of the product, right? Otherwise, it's just a death benefit play. And it's not a very good death benefit play compared to an LTC rider on an NLG contract. And you want to take the money out, especially during that extended 4-year bucket on the CareMatters contract, because if they were to pass away and leave money on the table, guess what company gets to keep that money? Nationwide, right? We're not paying out anymore. So always take the money on a linked benefit product when you can. It's imperative. As Neil had mentioned, one thing to know, we provided on international benefits. Our LTC rider is payable overseas, up to 100% on this contract.
Wow.
So I will say that now that things are starting to open up from a foreign national planning, we had restrictions up until the end of last year on foreign travel and foreign nationals, and that's opened up considerably. So I would say that if you have anybody that's planning on moving overseas, really the requirements are that they move to a place that isn't on a watch list, right, from the federal government. We don't want to send money to Yemen or something. And we've got to have an equivalent healthcare system to where they are moving. So usually A countries, B countries are fine. So C countries are off the table. But that to me is a nice planning tool. And again, the eyelet thing that Neil mentioned, I'll get that information over. I'm going to go through this very quickly. This is CareMatters 2. Payment options, that is big. So we have a single premium, 5 pay, 10 pay, pay to age 65, and a pay to age 100. So very flexible product in regards to payment options. We have 3 refund of premium options. We have one that pays 85% years 1, and then it grades up by 3% all the way to the 6th year, where you pay 100% in year 6 as far as return of premium. Then we have an 80% to the first 10 years, and then in 11 years plus, it's 100%. And then we have a maximum LTC benefit return of just cash value. Now, this can be used for clients that just want to boost up and get as much LTC benefit as possible and not worry too much about refund of premium. I will tell you that the refund of premium on this last option is about 50% of what the other ones are. Cash value build is not a big thing in these contracts. So keep that in mind. But if you want to maximize how the product looks, as far as benefit, that's the option. And we can help you with any of that. Retroactive payment on elimination periods. That's the same as what we mentioned for the state of New York. Increased 1035 flexibility. That contract in New York is not 1035 friendly. So if you dump in a single 1035 exchange of $100,000, that contract needs another $100,000 if you're doing a single pay, or $100,000 every year for the first 10 years. So it's not friendly. 1035s are not welcome in the state of New York for us. That will change. Outside of New York, you could put $100,000 in and pay $3,000 a year for the rest of the contract. So there is flexibility there. Separately identifiable premiums is a big one. If you know business owners, and you can sell this contract to a client outside of the state of New York, I would love to send you some information on this. It's kind of, we're over time here, but we have separately identified the premiums that are life insurance and LTC in this contract. Under healthcare code, in the IRS code, you can deduct healthcare costs as in a corporate situation, right? So if we have a C Corp, if you know any C Corp owners, and we know what corporate tax rates might do now that we have a blue Senate up, if they go back up to 28%, people are going to want to talk about this. They can take an above line tax deduction for any of the separately identifiable premiums. That's not just the base premium, but any inflation options that you choose. So if they want to do a key person sale and they have 3 or 4 of their key employees, they can boost costs up within reason by using the 3% compound or the 5% compound, and have it to the point where you can deduct on an above line tax deduction roughly 40 to 60% of the premium that's being paid into this contract off their tax returns. So that is a big deal. It's to me, one of the hottest topics you can talk about right now is how do we keep people, and how do we do it as efficiently as possible in the current situation. So that's a big one. You can also use HSA dollars. Those have age-based limits, right? So if you're 61 to 70, that's the most you can do. I think it's like $4,400 roughly, that somebody could be reimbursed as a client out of this contract of that premium. So that's big. The other one is, say, an S Corp. There are a lot of people that own S Corps. If they buy this contract, all they have to do is write the check out of the S Corp's bank account, and they can take a deduction up to that age-based limits, and if they have the LTC costs built into the contract. So that if you're selling this, just ask them, do you have an S Corp of any type? And if you do, maybe we should think about writing the check out of that.
And Chris, real quickly, the tax deductible nature of this does not apply to LLCs, sole proprietors, or personal deductions, or it does?
It does, yes.
And is that just for the CareMatters 2 or for CareMatters as well?
I wish it was CareMatters.
Damn, that's
I know. I know.
Yeah.
Because the state of New York's with a 20% tax credit on top of this. When we release that product, we're hoping to have it by the end of the year.
We should be right out on that.
I'll keep Neil informed, but if we could combine the separately identifiable premiums with the tax credit, it would be a home run for people. So
Well, keep me posted. I'd love to get that 20% of my CareMatters off.
I hear you.
It kills me every time I talk with my accountant, but thank you.
I know. Well, thank you for buying the product, and yeah, we'll let you know as soon as it happens. So that's really it. I think I ran over. I hope you found it useful. There's,
Terrific.
This to me, it's important to always have as many options on the table when planning for LTC or discussing it. I think we have a very strong offering in the state of New York, and anything that we can do here at Nationwide to help you, please let us know. We have an LTC calculator that's client friendly. That's a microsite and has a bunch of information on there, great videos, interactive tools. I'll send the address over to Neil as well so he can forward that on. But it's a great piece to just have somebody go and visit as a client. So.
Yeah. Now at the end, thank you, Chris. It was a terrific presentation. At the end of the day, there's a lot of options out there, and some of what Main Street Planning Group offers is actually the people on this call. Not only a wholesaler like Chris, but an estate planning attorney like Larry Shear. Adam Flattail helps your clients out if they're in desperate need and they need a place to go. That's what Adam does. He helps arrange for for families and gives them options. And that's so important. The idea is we want to take care of our clients. And the other idea that I think is so pertinent, and I can't enforce it enough, is you have to have that discussion with every client, whether they're an investment client, a life client, the kids of a client. You got to have this conversation because this is the real pandemic that has not gone away and only will be bigger in the future. They found a way to keep us alive forever, at least our bodies. They can keep replacing parts, but they haven't figured out a way to pay for it and how to care for it. And that's what we're here for. Any other questions?
Hey, Neil, do you want to touch base with me after this so I can run the particulars of that?
Absolutely. Yep.
Thanks,
Right
I
in.
appreciate you.
No worries. All good. Thank you all for coming. And again, we'll do a follow-up email. On the follow-up email, you'll have a recording of this call so you can refer to these charts and everything else. And any added information you need, we're happy to provide. So thanks again.
And the brochure.
Thank you, everyone.
Neil,
And a
thank
brochure,
you.
Neil?
Chris,
Thanks,
thanks.
guys.
Absolutely.
Yep.
Thank
I'll
you.
make sure to send everything over. Thank you so much.
We got it all. Have a
Great
great
job,
day.
Chris. Thank you.
Thank you. Thanks.
Thanks, Neil.
Anytime, my friend.
Okay.